we have the radar screen. This is what we call the radar screen. And we, as you can see, we group the pairs. So for example, here I'm grouping all the pound pairs. I'm grouping all the Aussie pairs. I'm grouping all the euro pairs. And I'm grouping my yen pairs. So with that, I have those currencies in groups. And then we have what we call our deltas or our retracements, and these are gauges that we measure the extent of the move. You can use the net change. I mean, the net change can suffice for you. So for example, if you look at these are from the last session, you can see that the dollar Swiss has moved 14 pips. The dollar yen has moved 10 pips. But the pound CAD has moved 146 pips. The pound yen has moved 114 yen. That's the pound Swiss. It's beginning to change. The pound dollar has moved 90. So you can see from the net change that the pound has been weak and it's moving extensively. Now you come back down, let's say, to the euro. These are the euro pairs. And you can see that the euro Aussie is 27 pips. The euro CAD is about 60. The euro Swiss 36. And the euro yen is 20. So you can see that the average move in the yen is about, in the euro, is about 20 pips. So the average move for today, Bill, is about 20 pips on the euro. And the average move in the pound is about 100. This means that the pound is 5 times weaker than the euro. Do you see what I'm saying? The pound, I mean, this is simple common sense. This is simple common sense. The pound is 5 times weaker than the euro. So with that, Bill, which one do you want to go short? The pound or the euro? Definitely have something that is 5 times weaker, then I will be going short the pound. And if I'm going to go long the other currency, then I can go something which is like the euro, which is at 1/5 the weakness. So in that case, and this is the trade that I did this morning when we were planning when I did the trade before when I put the blog, we said, okay, the pound was extremely weak and the euro was also weak. I mean, was also negative, but the pound was 5 times weaker than the euro. And that was sufficient enough as a tool for us to take that trade. And this trade was taken from here. I'll show you the trade. And this is the stuff that I do for you in the blog every day. So I try to put that for you before the market is open. And having done that, it became that the euro pound was one that I will be looking to be a buyer. I will be looking to buy the euro, and I will be looking to short the pound. It's just downloading some of the data here before the signal comes in, and you'll see that the trade that we took this morning. And if you go to as I said again, to the blog, you would see the trade at its inception before we were actually doing the choice. I walked you through, now I'm going to do this. Waiting for the data. So the trade was from here. Anyway, I'll show it. So this way is one of the tools that you can use in identifying which pairs are stronger than the other pairs, and you can use that to execute the choice. The other pairs, again, you want to be looking at, if I'm going to do the same process again, we can see that the Canadian is very strong. across the board. The Canadian dollar, the dollar CAD was moving 39 pips. The pound CAD was moving 150 pips. The Euro CAD was 72 pips. And so in this case, the CAD is extremely strong. So if I wanted to buy the CAD and I don't want to be caught in the volatility of the fluctuations of the market moves, then I would be looking to buy the CAD in addition to the techniques that we train you here on how to enter and buy the, but in principle, you will be looking at the weakest against the Canadian. So if I'm going to go long the CAD, then my first candidate will be to short. Which is the weakest in this? Is the Euro weaker than the pound? I mean, when we did our selection, we chose the pound as weaker, 5 times weaker than the Euro. So in this case, I can go first short the pound CAD. Then I can my second choice would be selling the Euro CAD because it's giving me 73. The least would be the Aussie CAD. And again, the only thing, just based on this, you're looking at strength. You want to buy the strongest of the strong and you want to sell the weakest of the weak. Okay?